Hello, 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 everyone. Welcome to Touching You Talk Show. This is Elder Sheila, and I have a very special guest with me today in the person of Brett Moore. How are you today?
Doing well, doing well. Thanks for having me.
Absolutely. So, I'd like to ask my guests, how long have we known each other?
We've known each other about. I remember where I was when we were talking the first time. I was at the mall.
Probably in January,
Yeah, I
February,
was gonna say about six
January.
months. I was gonna say
Yeah,
yeah, yeah.
yeah. It's been a pleasure getting to know you. Yeah, yeah.
Likewise.
So, where are you located?
I'm in San Diego.
Okay. What's the weather like out there today?
Yeah, sunny as always. We're always in the low 70s. That's what about like we okay, last week during the week, for whatever reason, it got to about like 80 something, and people almost started freaking out. And then it went back on the weekend to about 72.
Must be nice. Must be nice. Well, we're not here to talk about the weather. We're here to talk about you and how you are helping countless people reach their financial goals. So, first of all, tell me about you. Where are you from?
So born and raised San Diego. I went to Cal Poly Pomona right out of high school, and I was out there. I was a sports medicine major initially, and then I switched my major to business, financial real estate and law. Yeah,
Sports medicine.
yeah. Initially, I mean, I played football and baseball, and
Uh-huh.
I had an injury my junior year. Just the way that the injury and my rehabilitation of it, like I don't know, it kind of piqued my interest, and so I went to sports medicine major initially until my freshman year. Though I asked my advisor, I said, "What's the most I can make in this field?" And she's like 120,000. I said, "Well, okay," but my older brother was making well above that, and I said, either I could try to become the very best in the sports medicine world, or I could get in business with him. And
Mm.
essentially, I switched my major and started shadowing him, and got in business with him. He was in the real estate industry. Then he added mortgages to his real estate business, and then somebody approached him and said, "Hey, if you started adding financial services, meaning you're already taking these families on the weekends, showing them some homes, because you do the mortgage part, you already know what they can get approved for, and you have all their information. You're proving to the bank beyond a reasonable doubt that they can afford this home. Why not make a couple recommendations relating to the making sure the breadwinner is covered if something were to happen to him prematurely? Why not make a couple recommendations as far as the kids being able to have some college funds set up, right?" And so he added financial services to his business. It would pay an extra $2,000 to $4,000 per transaction, and it paid residually too. So I mean, you think about in the mortgage real estate world, mortgage professionals and realtors only pay that one time that they close the transaction, versus in the financial services space, the majority of the products are paying out residually as clients are paying into their products there.
So, can you expound on financial services? I know people are like, what's financial services?
So, what in our world, financial services, we start a lot of our conversations off at the point of retirement, and but from there, we want to make sure that retirement account is protected, right? So protected against someone getting sick, because they could very well, I can meet with someone, they've got a plan and they're 45 years old. We say, okay, great, we're going to set you up with, based upon this account value, and here where we're going, you're going to have $250,000 at age 65, or $500,000 at age 65. But we want to make sure that we protect that retirement account, protect that retirement plan. God forbid if something happens at 55 or 45 or 50, right? And so we want to make sure we protect it oftentimes with what's called living benefits life insurance. So it's not your typical life insurance where the only benefit goes to a beneficiary if somebody passes. Living benefits life insurance means that, God forbid, if someone gets sick, heart attack, cancer, stroke, if they're unable to perform two of the daily six living activities, they now have peace of mind because they can pull money from their life insurance policy and pay a family member or facility to help take care of them on a monthly basis. So it's pretty powerful life insurance, because out with the old type of life insurance that only has a death benefit to it, and in with the new, and making sure that, hey, as opposed to, I've had clients that got sick with breast cancer, and they actually beat the breast cancer, which was a blessing. It was awesome, but they had to exhaust their whole retirement account in doing it. And so, yes, they beat the breast cancer, but then now they have nothing for retirement. as opposed to I've had some clients that listened to me and actually put together the plan to make sure it was protected, and they were able to pull money from their life insurance policy, not have to pull money from their retirement account, beat the cancer, and their retirement account is still in place.
So why do people put up the cross sign when you say life insurance policy?
I think
why do people think that it's only about death?
I think that the life insurance industry has gotten a bad rap in the past just because, one, there's high turnover in the industry. And I think there's high turnover in any industry where somebody's paid 100% commission, right? Because that can be a scary thing. And so I think it's that high turnover. And therefore, if your rep, your original contact is no longer in the industry and no one's meeting with you on a consistent basis to consistently update you on how your policy works, that could be a challenge and there's things that happen in life. And when things get tight for people financially, life insurance policy is one of the first things that they let go. They'll let it lapse and say, oh, well, I'll just get it again in the future. And well, all that money that they put in is then gone. And there's clients like my parents, they had the wrong type of life insurance. They paid into a policy for 25 years. My dad got sick a couple years before the policy expired because it was only one of those ones where it was for a specific period of time. And they paid into it $125 a month for 25 years. At the end of the policy, they got nothing for it. Wow. And so that would be a bad rap scenario because the agent that set them up with that policy wasn't educated on, hey, they should have a permanent policy, right? They should have something that lasts them for the rest of their lives. Nobody met with them in that period of time to make sure that all that money wasn't just going to go to the company. And so I think it's important just to educate ourselves and have someone in the industry that's going to consistently meet with you and say, hey, here are your options.
Wow, that's amazing. So tell me about, I've gotten some things in the mail from like my credit union company, and they're saying, oh, you can get for $25 a month, you can get this life insurance. But then if you read the fine print, after a certain age, it starts to decrease. The benefit decrease at a certain age. So can you tell me about your knowledge of what those type of policies are?
So a lot of those policies are like kind of the group. Those are group policies a lot of times, and sometimes it's based on your age, right? And so even the different age points, your policy either coverage will decrease or the policy premiums that you're paying into it will increase if you want to maintain that coverage amount. So it's a lot better. And I know we all get all this stuff in the mail because you're going to receive it from your homeowner's insurance company. You're going to receive it from your car insurance company. You're going to receive it from your banks, your different credit unions. But it makes all the sense in the world to actually have a financial professionals in the industry actually sit down with you and explain the concepts and strategies to you. With this day and age, we've got Zoom and the different online platforms. You can still meet with a financial professional that way. But I think it's important just to meet with someone versus just doing business that with whatever piece of mail comes through your mailbox there.
So why do people not feel like insurance is an important part of your financial portfolio? Why do people think that it's not important?
I think with the emergence of because it's not sexy. It doesn't have that sizzle to it. It's not super shiny, right? I think that with the influx of today, a lot of crypto. Crypto is exciting. Oh my gosh, it's at this value and that value. And it's up and it's down. And oh my gosh. And then, this person made this money. Majority of people haven't realized those earnings, meaning there's not too many people. I don't know anybody that got rich from crypto. I know a lot of people that have invested in it. And it's not like stocks. It's not up and down and keeps you all, your emotions going. It's slow and steady and it's consistent, but it's coverage for the rest of your life if you structure it properly. Right. And so I think that's one of the reasons why people are like, oh, I don't know. And they always and while we're young, a lot of times we always think we're going to be invincible and nothing's going to happen to us if I set up a plan at 35 years old, if I'm setting up this long-term plan, I'm not thinking about a what if at 45 or 55. I'm just thinking about, hey, this is what it says I'm going to be. This is what it says I'm going to be at 65. Because I know for a fact I'm going to live till 65 and nothing's going to happen to me. And I think this is where, having the life insurance plan in place can really help.
So, okay. So, tell me some of the other benefits of having a life insurance policy. Now, you talked about living benefits where you can actually draw cash if you have a what they would call a illness, a critical illness that would keep you from doing your job. What are some of the other benefits of having a life insurance policy?
So, I mean, life insurance as a whole could definitely be used as a wealth management tool to should turn pass on to beneficiaries. But the old type of life insurance was one that basically all it had was, or all it had is, the death benefit that your beneficiaries receive. The new age strategies that my team and I help people with are living benefits life insurance that has things in place that, God forbid, if a doctor deems you terminally ill, then you have access to lump sum to either go act out a bucket list or get a second opinion. And so you would have access to about 75% of your death benefit or 50% of your death benefit. So if you've got a $250,000 policy, you get access to $125,000 immediately, right? Or the other living benefits. They've got chronic illness, critical illness. So this is your heart attack, cancer, stroke. This is depending upon the severity, and you just say, hey, this is what happened, and I'm in need of some funds or an accelerating my death benefit. Then you, depending upon the severity, they're going to evaluate it and give you a couple of different offers so you can receive lump sum from that. But then they also have with the chronic illness, which is, I'm unable to perform 2 out of the daily 6 living activities. That's eating, bathing, toileting, transferring, continence, dressing. Okay. I've been licensed. You and I were talking about it briefly. Licensed 23 years. For the first part of my career, being so young, I sold on hypothetical scenarios. And I said, well, if this happens, if that happens, well, I saw a huge need for these type of policies in 2014. My mom got sick with ovarian cancer. When I had to actually help her, like hoist her up in a swing and move her from her favorite chair in the living room to the hospital bed that was in the living room, it was only a few feet away, I saw a need for living benefits life insurance. I saw a huge need for it again when my little sister got sick at 31 years old in 2016 with stomach cancer. Right. And so my older sister had to move from St. Louis to Dallas to help take care of her. And because she had 2 young kids, so we all know that we're going to pass one day. And I know that we're all, putting that thought off until it's on our doorstep almost. Right. But most of the time when we're not thinking about it is that we're going to get sick. See, we're not just healthy one minute and just killing over the next. What typically happens is our bodies deteriorate over time. And so first your eyesight goes, right? Then you're not hearing as well anymore. All right. But then, certain things happen. And so my question for a lot of people is like, hey, do you have something in place in case you were to get sick? And what about those that depend upon you or those that you care about? Do they have something in place in case they were to get sick? This is where living benefits life insurance can actually offer that peace of mind. It's a really big deal.
So can you take out a loan against it?
You can take out a loan against your cash value life insurance. Is one of my favorite things to do. To me, the properly structured cash value life insurance policies, permanent life insurance policies, it's almost like a Swiss Army knife, meaning I've got protection if I were to pass too soon, right? If I pass too soon, there's death benefit there. But if I live too long, right? Almost it's oxymoron, I live too long. But if I'm living a long, fruitful life, I actually have cash value accumulating in the policy. So with permanent policies, if they're structured properly, part of the money that you put into it on a monthly basis is going to go to the cost of the insurance. So it's going to cost you to have a life insurance policy, right? But the other portion, so let's just say you're young and you put away $100 a month, 50 of it goes to the cost of the insurance. The other 50 is going to accumulate cash value that's going to grow at a particular interest rate. You can withdraw from that in the future, income tax free.
Wow.
Yeah.
Wow.
In fact, right before I got on this call, somebody was emailing me and just saying, hey, I want to get an update on my policy. They had about $60,000 in cash value in their life insurance policy.
Wow.
Right? Yeah.
So how important would that be, and how beautiful would that be if you purchase a policy for maybe one of the young people in your lives, maybe your child? If you started like, I don't know, when they're 5.
Yeah. Oh, big time, big time. I mean, we've got a little girl on the way. She'll be here July 2nd. By the end of July, she will have her own life insurance policy. So, I think it's just super, super important that you start that at a young age and start accumulating some cash value in the policies for them, because it can be used for college funding in the future. It can be used for, tuition, books, whatever case may be. But it can be used for as a wedding gift. It can be used as money on getting started on a business or a down payment on a home. It can be used a number of ways.
Wow, that's amazing. I've been tapping into the grandparents to see if maybe they would be interested in like giving their grandchild a policy rather than buying them those brand new tablet or the brand new phone. Give them something that they can use when they grow up. How important is that? Leaving a legacy for your children's children. How important is that?
Exactly. And even if the parents are the owners of the policy, you can always have the grandparents or uncles and aunts, as opposed to, they can write in and send in a check and say, hey, apply it towards this policy. That can be listed as one of the birthday gift items as well. So there's a lot of different ways. I've certainly helped grandparents own saving strategies like in the form of life insurance for their grandchildren. I've helped the parents, but the parents set it up, but they also let the grandparents know about the account and say, hey, if you want to contribute some money, here's the account info and you could send some money in as well. So there's definitely some options there.
That's amazing. That's amazing. So let's see, what else could we talk about as it relates to insurance? Tell me about the people that you have helped start their own insurance empire. The people
Yeah.
you are training. And we were talking about this before. You say you've been in the business how long?
23 years, like as of October, I will be, right? So, super exciting. I looked at it like this. I always wanted to, be in the industry and make a great income for myself and make a full-time income, right? I mean, I think anybody that gets started in a 100% commission world, that's kind of something like always this resounding question in the back of their minds. Hey, can I do it? Can I do it? And once I answered that full-fledged for myself, and it really wasn't until I got into working in a niche market, working with teachers and school district staff, doing workplace marketing, meaning going to one building and there's potentially 50 to 75 potential clients there. And it's all predicated on me just getting a relationship with them. And from there, I'm able to schedule appointments that take place at the school. And so now I can work a daytime schedule or I don't have to, show up to people's homes and nights and weekends, harass them or chase them down. And so once I got really good at this business, then I started turning around teaching and training others, because I was goofing it up every which way that you can, right? When I look at it in hindsight, I'm like, man, there was more efficient ways to do this business. I was trying to work 10, 15 schools, and that's too many people. Like that, you're not doing it efficiently, right? So then I started bringing other people on board with me and started teaching and training them how to work these schools. And making a $10,000 a month income was my goal initially. And then it was like, okay, how many other people can I help make $10,000 in a month? And so then it was like, how many other people can I help make $100,000 in a year, $250,000? How many people am I helping make that and more from there? Once I shifted and started my focus on helping other people make that amount of money, then I definitely saw my income dramatically increase.
That's amazing. So it's like the gift that keeps on giving.
Oh yeah. Especially in financial services, the residual. We make a great upfront income from the retirement products, from the life insurance products, but also we get paid a great residual income as well. So like that really kind of takes the scary part of being in the 100% commission world out of the equation a little bit. It pads it a little bit, makes it less scary.
That's good. So I did want to ask, going back to the life insurance, excuse me, how important is it to have life insurance outside of your job? Like, okay, I'm working a full-time job, and of course I have life insurance there, but how important is it for me to have it outside of that?
I always ask people, I said, do you plan on working here until the day you die? Because that's the only way that policy is really going to matter. Right. And hey, if something happens prematurely, that's a policy that's going to be in place there. But unless you plan on working at that with that employer until the day you die, it's not going to. I've seen people have workplace life insurance, have like a heart issue, go on disability, and the employer, because now this employee is on disability, I saw that her employer decrease their life insurance. I'm like,
ooh, I didn't know they had the ability to do that.
Yep, I've seen it happen. So to me, it makes all the sense in the world to have something standalone, no matter what industry you're in, who you're employed with, to have your own life insurance policy.
So what do you recommend for those who the company may deem uninsurable? What do they do?
Well, I would say, is it something that, well, a couple different things. One is it a health challenge or ailment that you can fix or improve? And if it is, then work towards that. Also look for simplified issue or guaranteed issue companies. So simplified issue, maybe that they're going to ask you a series of questions. They want to make sure you're not currently incarcerated or on parole or that sort of thing. But the guaranteed issue policies, I mean, having coverage is better than not having coverage. But sometimes that price point it may be really, really expensive for those that are older with the health challenges. So definitely weigh your options. It may make sense for you to just simply put money into an annuity. If it's a health issue and you say, hey, okay, I'm a smoker, it's too expensive for me to get life insurance as a smoker, I'm going to stop smoking and I'm going to work on my health. Okay, great. Put money into an annuity right now and get in the habit of saving that money and go back and retest in a year or 6 months or 9 months and see if you can then get approved for a policy and use the funds that you've been setting aside for that life insurance policy.
So then for the person who feel like they can't afford it, so what do you say to that person that feel like they can't afford it?
Yeah, for the person that feels like that's this, and we all create all these stories. There's a couple of different, I guess, factors when it comes to life insurance. Okay, so term life insurance is the most popular because it is the most affordable. And what you can do to make it a little bit more affordable for people is to really minimize the period of time. We've got policies anywhere from like 5 years to 40 years of coverage. So if you minimize, obviously someone having coverage for the next 40 years is going to be a little bit more expensive than someone having coverage for the next 10 years. So if you're saying, hey, and I've helped single moms that are saying, I only got $100 a month right now. Well, we stretch that $100 a month to do a term policy for the mom, a college funding strategy for the little one, and another Roth IRA for the mom. So now she walks away with a retirement started strategy, and it's just about starting. Get that habit formed right now, right? So now she's walked away with life insurance, a retirement account, and a college funding strategy, all for $100 a month. And then we meet back the next year. We meet back the year after that. And we say, okay, great. Hey, are you in a better position? You already formed that habit of saving or setting aside that $100 a month. Why don't we increase it to 125 now? Why don't we increase it to 150? Right? And once debts get paid down and different things, maybe the child's out of child care now, that's a huge expense for a lot of families. Once those things change, then we can also, change the plan. But doesn't mean that we just don't set money aside, period. We need to be certainly taking care of those things because things can go from bad to worse real quick. Right.
So what other things do we need to consider when we're thinking of life insurance and making sure that, we're covered? Defunding GoFundMe. We really need to try to defund GoFundMe because GoFundMe, give me your thoughts on GoFundMe. I know it's a great way for people to raise money.
It's great. It's after the fact kind of thing. And it does give me this irking feeling of I've been trying to tell you, I just why don't we have this thing? Why didn't you see? Why didn't you take advantage? Why haven't you reached out? Why, and it's unfortunate, and it's obviously something that people are using it. I think the people that are using it is something that they need, but I think that the industry as a whole needs more people reaching out to people that they know, right? And I don't like selling to friends and family a whole lot, but I want to remind them that I'm here to help. Right. And I think that more people, just the more that we talk about it, the more that awareness. That's really what it is. I think if people knew how affordable life insurance is when we buy it, we don't buy life insurance with just our money. We buy it really with our health. So for
Right.
anybody that's healthy, that they should be obtaining a life insurance policy, especially while they're young. And so like I think it starts with people that, hey, if you are uninsurable now, then you need to be reaching out to the younger people in your family and saying, look, you need to get the policy. This is who you need to sit down with. No matter what, you put away $25, $50 a month. Because you know what, some things that are some constants these days, and there's some no matter what bills that people are ultimately committed to. Their cell phones, right? How much are people spending on cell phones, right?
Right.
And they insure them and everything. Why aren't we doing the same with our lives? All right.
Wow.
And
Wow.
so some of these parents are, I've got a 11-year-old and he's wanting a cell phone, right? And he's working on his reading level and his grade and getting his grades up and making sure I'm checking with his teacher so he can get a cell phone by the end of the year, right? Well, he had life insurance before he's getting a cell phone. So I think it's important that we make sure that we're doing that with us, and then turning around and doing it with our younger generation, and teaching that the concept of strategy.
So I know I didn't ask you this before, but I'm going to ask you now. What about our seniors? And the reason why I say that is because I have a church member who she remembers the insurance guy coming to the grandparents' home, collecting the money monthly, eating dinner with them, praying with them. And then when her grandfather passed away, that policy paid $500 after he had paid all that money. I mean, obviously it was one of those decreasing ones or whatever,
Right.
where the benefit decreases over time. How do we go back and help our grandparents to just kind of look, our seasoned individuals to make sure that they're properly covered?
I think, and then when I hear stories like that, and I'm always curious as to what the specifics were, right? And how much did the client put in? What type of policy was it? How much did the client actually withdraw? Sometimes we look at these policies and we didn't know, oh, it only paid this much. Well, we don't know that, grandpa pulled some money out from the policy, before they passed, which was their right to do because it was their
Mhm.
money that's going in. But how do we encourage the older generation? I think that I mean, we just got to get in front of them and have some more conversations about it and say, hey, look, I want to make sure that things are well. And there's different types of life insurance. I'm helping a family right now. Unfortunately, my mom passed, and I was on the phone with the son, and he wasn't quite sure how to obtain the death benefit from it. And I'm trying to explain to him that the company needs the death certificate in order to release the funds, and he's like, well, I got to wait on the death certificate. And so there's even policies where you don't have to wait on the death certificate. There's burial policies. There's all these different things that be great solutions for our older generations. I think that it requires industry professionals that care about people to go have these conversations with people. And it does definitely require for other people to be open to it. Um, so that's some solutions on that, but it's just more of a focus and more conversation around it. That's what it is.
Okay, so I remember going through testing for, the sell annuity products, and how you had to tell them over and over and over again that you're not the strategies that you're offering the client benefits the client more than it does you. So I think oftentimes there's a misconception with insurance representatives that people feel like we just want to take their money. But how important is it for them people to realize, okay, yeah, I might make $100. I might make $100 off of that. But look at what you or your family, the benefit that you are going to get
Yeah,
from.
I think I don't think people. I think it's a feeling, man. I create a feeling with my clients. They know I'm going to make some money off of working with them and doing for them, but they also know that they feel the value. And I think that it takes the industry professional to have the experience of, hey, this is the benefit. Here's why you would be setting aside $200 a month, because this $200 a month is going to pay you $2,000 a month when you get to retirement, right? And by the way, you've got this much in life insurance coverage. God forbid something happens to you. And by the way, you got this much. So explain the benefits. I think the benefit, as long as it's explained properly, then people aren't worried about how much money you're making off of them at all whatsoever. They want to know the benefit off of their dollar. And I think that it does require for an industry professional to come in, and I think working with the right team and the right system to feel supported so that you're not coming off with what I call commission breath. You're not coming off super, super hungry just to make that sale. Because, and my brother always shared with me, he's like, hey, one deal makes or breaks you, then you're broke, right? One deal makes or breaks you, then you're broke. And that's when people are coming off with commission breath. So you got to stay in the industry, get ingrained, work with the right team, fill your pipeline up so people aren't feeling that type of commission hunger from you.
I see. I see. So tell us how passionate you are about helping people. Tell me about your passion for helping other people.
I get super fired up for helping people. I am definitely passionate about, I like the feeling of now when I sit down and help clients that it doesn't come off like I am, because my income is not derived off of my personal production, right? At this point in my career, I've got residual income coming in. I've got income production from my agency that I've built. So as I've got a team and override income from them, when I'm sitting down and helping someone, I will help the client that wants to put away $50 a month. I will help in the same week, in the same breath, in the same day. The client that puts away $500,000 with me, I treat them both the same. Say, hey, here are your options. Here's what we can do. Because if me personally helping them, I'm like, this is all extra income for me. Me personally doing it. My income is derived off of these other 115 people that I've taught and trained in this industry to go help people. So, I mean, that's my passion for it. And I know by me recruiting and teaching and training other agents to go help people, me with a team, we can help way more people than I can do by myself, right? I only have the capacity to probably help, I don't know, 30, 40 people max on a monthly basis, right? Mm-hmm. Myself personally. But now with a team, now I can help 500. Now I can help 1,000 people a month, right?
So tell me some of the challenges you faced.
I have faced a ton of challenges in the industry. I always tell people there's not a mistake you can't make that that I haven't made before. I goof this thing up every which way that you can. I mean, from being super young in the industry, my brother instilled with me, and was one of my biggest concerns. I already have a younger face. I'm 43 now, but can you imagine what I looked like when I was 20 years old when I got licensed? Right. And listen to the 20-year-old financial advisor, nobody. And so I struggled in the industry to establish that credibility piece. And I share with him, I'm like, people don't want to do business with me because I'm young. They're not going to listen to me about finances. He said, well, listen, it's not about your age. I've never not done business with someone because of their age. There's been times I didn't do business with someone because they weren't sharp enough. They didn't know their stuff. And so what you're going to have to do is become a student of the business and get really sharp and get really, really good at what it is that you're doing or how you're explaining it. And so what I did is I listened to the right CDs and the right YouTube videos and the right books, everything relating to personal finance, to leadership in the financial services space. And I got really good at it. And I dress sharp. I mean, I'm wearing a polo now, but you see my closet, I've got, 20 suits in there and 30 button downs and ties and all kind of stuff, right? But it's just, I've always had to dress a little bit, more professional than the next person, maybe, right? Be a little sharper than the next person, maybe. But that was just part of it. The other struggles and challenges, from entrepreneurship to expansion stuff and expanding. And me making sales is really simple, but me teaching and training people how to make sales is one level of challenges. But then what I also had to overcome is how to teach and train people how to teach and train people how to make sales. That's completely different. It's like multiple trailers pulling the different trailers. I'm like, okay, now we got to back up, and all these trailers are going to get all jumbled up if we don't do it right. So I've had to work on that and having cascading communication and having and holding others capable and not being a controller and not, okay, move out of the way. I'll do it. I can do it best. Move out of the way. I can do it best. I'll just do it for you. That's not holding people capable. And I think as a leader, you have to replace yourself with other leaders, and hold them capable, and have some check-in conversations, and have a team that you can trust, and they can trust in you and your leadership. So those are certainly the different challenges I've faced in this career here.
And then how did you deal with disappointments? Because you can't tell me out of 20 something years you didn't have any disappointments. How do you deal with your disappointments?
I early on, I used to take it pretty heavy and hard, but I think in you know, having a sports background, you learn to, okay, well, I'm going to be better next time around. I got to learn from this lesson here. It's not a loss, it's a lesson. And so how do we bounce back from the disappointment? We got to come back better every single time. And so, okay, we're not going to make that mistake again. Won't be caught, in that scenario again. I don't want to miss out on that sale again, right? If I went up against another advisor and somehow, some way they beat me, and the client trusted their strategy a lot more so than mine, I just got better at explaining the concepts and strategies, right? And so certainly I don't want to put a client in this scenario where they're not going to be better off. I want to put them in the best scenario possible. But I think the concepts and strategies that I share and I put together for clients are the best strategies for most, up to about 90% middle income, upper middle income America. These are the best strategies for them. So I just said, okay, every single disappointment, I got to come back better.
That's good. That's good. So what advice can you give to someone who is thinking that they need to do something to just make some extra money? What advice can you give them?
Well, I think if somebody who just want to make some extra money, if you wanted to use this particular industry for that, I'll tell you that sometime is no time, right? Meaning, I could just work this business sometime. And a lot of people want to get started on a part-time basis. And yes, you can make money on a part-time basis. I've worked with plenty of people on a part-time basis and then got them enrolled to work with us full-time. But those people that had success in that transition period were the ones that actually set the schedule aside, right? I had somebody shift their work schedule to go in at 6 a.m. and be done by 2 p.m. so they can work in the afternoons with me. But they were working with me every afternoon. It wasn't I could do Tuesdays and Thursdays from this time, and then it's different on this day. No, it had to be this set schedule. So that's why I say sometime is no time. You have to set that schedule up, especially this business is definitely a momentum business. And, it's like pushing a car up the hill. As soon as you let go of that car, it's going to roll back down. And so if you don't get that momentum on your side, then this business can be a real big challenge for you.
Well, that's good. Well, I definitely want to say thank you. Thank you for allowing us to pick your brain. Anything else you want to say before we get off?
No, I just want to say thanks for having me. I think that we need, more people in the industry, more people that are passionate and explain the concepts and strategies. I think that's one of the ways that we can kind of defund the GoFundMe stuff and really create some better wealth positions for those that maybe haven't experienced that before. If you've got siblings, why does everybody have life insurance in the family, right? That could change your family's lineage right there. The difference of having a $500,000 policy and not is a big deal for a lot of families, right? You can put that, everybody's going to be hurt emotionally, but are you going to be hurting your family financially as well if something were to happen to you? So I think that's a big deal.
All right. Well, thank you so much for being my guest. If you have any questions, just post them in the chat. We'll make sure and try to get back with you and get any questions you may have. If you want to know more information about what Brett does and what I'm doing with him, we'll be glad to give you some more information. We'll be glad to sit down with you. Just let me know. All right. This has been Touching You Talk Show with Elder Sheila and Brett Moore. Have a great day, everyone.